welcome back to Tax UK, where today I'm going to be explaining how UK tax works for your side hustle. Side hustle, trade, self-employment, small business, they're all terms which are often used interchangeably to describe the same thing. So to be very clear, what I'm referring to today is that you already have a job and that generates the majority of your income, but you've started a small business in your spare time, which is now creating a second income, and you're wondering how the tax is going to work. In this video, I'll explain what you need to do if you find yourself in that situation. I'm going to show you how you actually do it and when you need to do it. And I'm also going to show you how in 2 minutes or less, you can actually work out exactly how much tax you're going to pay on your additional income. Now, in terms of what you actually need to do in this situation, if you do start a small business or side hustle, then that side hustle will usually be treated as a self-employment, and you may need to register as self-employed and then complete a self-assessment tax return once per year. Now, I say may need to register because you would only need to do this if your total self-employed income, which is the income from your side hustle, if it exceeds £1,000 in a tax year. The tax year runs from the 6th of April to the 5th of April the following year. So where your side hustle is small, or maybe you're just getting it going, just getting it off the ground, and your income is below £1,000 in that time period, then there's actually no requirement to register and no requirement to complete a tax return. So essentially, you don't need to do anything in that case. But if you do exceed the £1,000 of turnover, then you'll need to contact HMRC to inform them of your self-employment before the 5th of October that follows the end of the tax year that you started the self-employment. By informing HMRC, you are committing to completing an annual self-assessment tax return. They will then send you a reminder each year and a deadline of when that return needs to be in by, which typically is the end of January. And you may also need to pay tax on that second income, which is what the tax return will calculate for you. And if you're wondering how to actually go about doing this, the easiest way to register, of course, is going to be online. But in order to access the registration form, you first need to set up a government gateway or business tax account. And it will tell you here, if you've not filed a tax return before, you need to register for self-assessment and Class 2 national insurance through your business tax account. The problem is you need a government gateway user ID and a password first so that you can log into your business tax account. And then from inside that tax account, you'll then be able to register for self-employment and self-assessment. Now, to do that, you can simply Google government gateway or government gateway login and then follow the steps in order to set up a new account. You'll then use your login details and your password to log into your business tax account, and it will look something like this. Now, I'm already registered as self-employed and set up for self-assessment, but you're going to follow pretty similar steps here. What you'll find is a link below, a link on the first page that says get online access to a tax. You can follow that link and then you'll see the different taxes that you can add. In this case, you would want self-assessment. You follow the steps through here. Do you have a UTR already? Most people won't have a UTR. Again, in my case, I'm already set up, but I'll say no here. And then you'll see here, the difference with my account is that it's only offering me to be a partnership or a trust. That's because I'm already registered as an individual, but typically you'll find the option individual here. So you would select that and then continue through this form. Now, in terms of when this actually needs to be done by, I would always recommend to do it as early as you can. But remember, it's not a requirement until your total self-employed turnover, which means if you have more than one self-employment, then you need to combine the turnovers. And turnover is the income that you receive before you deduct any expenses. Where that exceeds £1,000, that's when the requirement kicks in. So I would be looking to do this at the point you know that your turnover is going to exceed £1,000. And if you're wondering how much tax you're going to pay on your second income, it's normally quite straightforward to estimate how much of that second income is going to end up in your pocket after the tax man has taken their share. But you're going to need to consider two taxes. The first is going to be income tax and the second national insurance. Now, with income tax, you only receive one allowance, and it's known as your personal allowance. It's currently £12,570 per tax year. And because you only get one allowance for income tax, this means that you can just take how much you earn from your employment and you can plot it onto an income tax table. An income tax table is going to look something like this here. It shows you the rates of tax and the amount you can earn whilst paying that rate of tax before you move on to the next threshold. And if you transfer the upper limits of each banding, so I now know that I can earn up to 12,570 at 0%, I can earn up to 50,000 paying 20% and 150,000 40%. Above that, everyone pays 45% income tax. So if I'm earning 30 grand from employment and another 30 grand from self-employment, then to work out how much income tax I'm going to pay, the first thing to do is to work out which band you fall into at the moment, just thinking about your employment income. So 30 grand would put me somewhere between here and here. So I fall into the basic rate tax band, which is 20%. The next thing to do is to work out how much of that band I have remaining. So you can take your 50,270 and deduct your employment income, which was 30,000. So I have £20,270 remaining of the basic rate band, which means that amount is going to get taxed at 20%. Okay, you can put 20% in here and then multiply these two out. So 20,000 times 20% means I'm going to pay £4,000 tax in that tax band. Following that, you'll then need to work out how much more income you have. So I had 30,000 in total and I've already taxed 20,270. So the next 9,730 is going to fall into this higher rate tax band and you're going to pay 40% tax on that. Again, you can multiply these out and it's going to give you a total income tax bill of £7,946. So you can see here the income tax bill alone is nearly £8,000 on that 30 grand of income. It's quite a lot of money to pay, and the main reason for that is because you only get one personal allowance to share between your self-employed income and your employed income. In this case, your employed income has already used up that allowance, which means you get a pretty hefty income tax bill. With national insurance, it does work a little bit differently, and hopefully you'll end up paying a little bit less national insurance when compared to the total income tax bill there, because we do pay national insurance through our employment income, but we normally pay class 1 national insurance, and through self-employment we're actually going to pay class 2 national insurance and class 4 national insurance. Now, class 2 national insurance first is quite straightforward. It's £3.15 per week that you were self-employed. So if you started at the beginning of the tax year, then there'd be 52 weeks. If you started halfway through the tax year, 26. If you started last week, then you'd only pay 1 week. Now, with class 2 national insurance, you only actually pay this if your self-employed profits are in excess of £6,725. Anything below that, and you wouldn't pay this at all. So 6,724, you wouldn't pay anything here. 6,725 or above, and you'll pay £3.15 for any weeks that you've been self-employed. So in this case, we'll say that we've been self-employed for the whole year, and we'll pay £3.15 times 52 weeks. And that's going to be your total class 2 national insurance bill for the tax year. Now that's going to be the same whether you earn 7 grand or 700 grand, but class 4, which we'll look at in a second, works a little bit differently. But that's certainly your first total that you're going to need to consider. Class 4 national insurance can be a little bit more complicated to calculate. You pay it at a rate of 10.25% usually. Remember, it went up from 9% this year, now it's 10.25. But again, you benefit from another allowance. So Class 4 national insurance actually only kicks in when self-employed profits exceed £11,900, £11,909 actually is. And when your profits exceed this amount, you'll start paying 10.25%. If your income exceeds £50,270, which remember, that's the end of the basic rate threshold at the point you move into higher rate tax, then national insurance or class 4 national insurance actually drops down to 3.25% at that point, and you would pay a lower rate of tax. So in this case, to calculate my class 4 national insurance bill, I take my 30,000 of self-employed profits, I deduct the 11,909 tax-free threshold, which leaves me with 18,091, which is going to be taxed at 10.25%. And you can see the total here. It's quite a straightforward calculation. £1,854.33 of class 4 national insurance. The total national insurance bill is going to be my class 2 national insurance plus my class 4 national insurance, given a total of £2,018.13. So you can see you pay a lot less national insurance than you do income tax. And again, that's because of those additional tax-free allowances that we can benefit from. From there, you can then work out quite easily the total tax. So income tax from here, plus a total national insurance bill. So you're paying nearly 10 grand of tax. Your total income or total profit from self-employment was 30,000, and what you were left with after that, £20,035.87. And this here is going to be the figure that you're actually left with, the money in your pocket after you've paid your tax bill. Now, that is quite a simple way of calculating how much tax you're going to pay. Shouldn't take more than a few minutes. The only thing it doesn't take into account for high earners, if you earn more than £100,000, there is actually a hidden tax bracket in here somewhere of about 60%. It's normally around the £100,000 threshold, where HMRC start deducting your personal allowance away. I've got a video about it on the channel. Go and check it out. It's called the UK's hidden 60% tax rate. But for most people, providing you're not earning more than £100,000, then this is going to be a good way of estimating how much tax you're actually going to pay. That was UK tax for a side hustle, what you need to do, when you need to do it, and how much tax you're actually going to pay. I hope you found that useful. Thank you as always for watching. See you next time.